So daily direction is very, very important as a trader for us to know our daily bias for the day, daily direction or daily bias. When you understand your daily bias or daily direction, then you will not jump into trade anyhow, right? On Tuesday, we covered weekly bias, but today we're going to look at direction. So the first, I said we're going to look in two phases. Now, the first phase we are going to do looking at this, we are going to look at it in a daily time frame. A daily time frame. So I will be using in a bullish direction. So let's say we have a daily time frame. This is a daily candle stick, right? So we have this daily candles formation like this. Now, this candle close daily. So as this candle close daily, when you are coming as a day trader, especially for those of us that do day trading, you want to understand how yesterday candle closed. Very, very important. Now, when yesterday candle closed bullish, if you are coming to the market today, your anticipation should be for bullish. Because why? Yesterday candle closed bullish. Now, if you follow this mechanism, at least, not that you will not lose trade, but you'll be sure of 70% correct most of the time. The day that you're going to lose trade as a day trader, it will be a day that's a reversal day, because we don't know a reversal day. And that is why it's only when market reverse that day that you're going to lose trade, right? But most of 7% of it, market will always go in the directions which price closed in the previous day. And I will tell you when a zones that when market likely to do what? Maybe a reversal day. So for example, we want to look at let's look at this zone as a support zone. Let's look at that zone first as what? As a support zone. Now, or a demand zone. So before a demand zone, so we are having what? We are having a bearish candle. So we are having a bearish candle that will be selling, right? So we have these two bearish candles now that enter this higher time frame, daily time frame, as what? As this demand zone or support zone. Now, these are daily candle. Please, you can see I'm on a daily time frame. You are not too hurry to trade. So yesterday, we have this candle close bearish. Now, today, 24 hours, you have this candle close bullish. This candle close bullish. It did not only close bullish, it closed what? A bullish with an engulfed previous bearish candle. Ladies and gentlemen, because of this that happened, this price action has turned toward bullish. So today, this price candle has turned from bearish to a bullish. So tomorrow, what will be your daily bias tomorrow? Your daily direction tomorrow is you are looking for opportunity to go what? Long, not to sell. That is it. That is it. Simple as this. So when price now, how will you enter? Where will be your entry now? So price will now open. No, price has closed. Price will open and begin to trade down first. It will trade down. Now, you can see it's trading down like a bearish. What's it trying to do? It's trying to form a support. So this guy trade down like this in a bearish. If we open, it will trade down in a bearish. Don't follow this bearish. If you follow this bearish, you will lose money. London session, that's what we call London key zone, right? So, and that is where we have the AMD happen. So, when we now have what's happening on 15-minute time from 1 hour, we now have this selling forming accumulations, manipulations, expansion there. That is how this price will form. This we call AMD. Now, or ICT call it Judas swing. So this is what the manipulation that happened. Now, in a daily time frame, you will see it coming down. But when you drop to, so from daily time frame alignment, you now move from daily, you don't jump to 15 minutes once. From daily, you go to 1 hour. So on 1 hour, you are waiting, this is what you are expecting to happen. So on 1 hour, you are waiting for a liquidity sweep to happen, a breakout structure to happen, a liquidity sweep. So this is where you take your trade. So now you will now see this, by the time a displacement, you will now see this bearish candle will turn to a bullish candle for the rest of the day. For the rest of the day. So by the time the daily candle close, it will close what? As a bullish candle. You see that if you say earlier, you will have what? Now your stop loss will be here. You will hit stop loss, and now. So this is it. Now we have what? Again, today, close, for example, by 10 p.m. Nigeria time, you have this kind of close bullish. When you are coming in tomorrow, what will be your daily bias? You are looking for what? A bullish continuation. This candle will open, it will trade down. You look for what? Go to your 1 hour or 15 minutes, look for a change of character. After you have traded down, there, and expansion will continue there. And so this candle will happen. We work, we trade higher, we trade again and close. So then we have what? Another, this is where it open, right? Another bullish candle close. Then you will see what? It may be a small wick or a wick like this happen. So in summary, likewise in a bearish scenario, likewise in a bearish model. So when you see a daily candle, when you see today candle close bullish on a daily time frame, as you are coming tomorrow, don't say you are what? Looking for a bullish opportunity. You continue looking for what? A bullish opportunity. As price trade down, go to 1 hour or 15 minutes, look for a model, this AMD model to happen. Then take any entry you know you are. I'm not here to discuss entry. I'm here to discuss the daily bias or direction. So So any day I come to the market, I discover that yes, this is today candle has closed bullish. Tomorrow as I am coming, I am bullish. And if it's happened that it closed bearish, today candle close what? A bearish market. As I'm coming tomorrow, I am looking for what? Opportunity to, when market open, price traded, I look for my AMD, there I look for a sell opportunity. So what do you take notes to take on this is that daily candle, as price cross daily, when you are coming, so the first thing is when you open your laptop in the morning, go to daily time frame. How did yesterday candle close? Then you are looking for a buying opportunity. If you close bearish, you are looking for what? A bearish opportunity. That is how you what? You trade in the directions of a daily direction. Now, in a day that a reversal is coming, let me show you what will happen. In a day that a reversal may come, it may come, let's say we have about consensus of a bullish. Now, okay, let's assume that these days, this candle close bearish like this. This candle close bearish. Right? This candle close bearish. For example, now, look at how this candle close bearish. Right? It closed bearish, it did not engulf this guy here. So it closed bearish inside. We call it what? Inside bar. Right? Maybe you are in trade. Oh, my Zoom has gone. So it showed me that we have 10 minutes remaining. So let's say you are inside trade. Let's say this candle, it came down, you bought, but at the end of the day, it did not display. This market is still a bullish market because we did not see price close below. Now, this guy will be, when you start looking for a sell, is when you have what? An engulfing candle happen again. So, for example, now look at Euro USD on a daily time frame. So now we have this price bullish. We have this guy. Okay, let's start from this bullish candle first. Look at it. This is where we start the bullish. Price has been trading down. Price has been trading. Okay, let's just want to trade down. What do we have here? We have an engulfing candle, here, right? Then, as long as this guy close engulfing, then the next candle open. So we are bullish. Okay, let's assume that because of this will not give us entry because it did not do AM model. But the third day, it came down. Now, this is the overall candle. Price came down there. Another bullish candle continued. So now look at this place. This candle closed bullish above this. And the next day, you took your trade there. It closed bullish. The next day, what happened? It closed bullish. The next day happened. It closed bullish. It closed bullish. As long a daily candle is closing bullish above previous candle, we continue bullish. We continue bullish. Now, a reversal happened here. Why? This is the last candle that closed form of indecision. But we have a bearish candle close. Then the second day, even while this one traded up, it closed bearish. Now, this guy closed bullish. Then we have a range start from here. But look at here. We close bearish. We close bearish. As long as we are closing bearish, today, close bearish above yesterday. As I'm coming to the market today, I'm looking for a sell opportunity. We close bearish below yesterday. Today, as we are coming tomorrow, we are looking for a bearish. So imagine every day you come to the market, you look for a bearish. Here you make money, you make money, you make money. These days, you will not make money because this guy did not close bearish, close bullish. But you are not losing trade because your stop loss will be around there. But the third day price came, This guy did not close bullish. We are still bearish because this candle did not engulf this guy. So we are still bearish. Then we came back. Now, currently, something is happening here now. You can see all this while we are ranging. If this guy close engulfing candle, this is a fresh trade now. If this guy close engulfing candle today, guys, if you close engulfing candle today above this red candle, so that means we have what? We have closed bullish. As of tomorrow, I'll be looking for a bullish opportunity. So that is it. I'll just be looking for what? Bullish opportunity. Why? Because if I see today candle close bullish, tomorrow I shall be looking for bullish opportunity. And don't forget, price is reacting from a strong support. You can see. And now, if we now have a bullish confirmation here, as we come tomorrow, what I shall be looking for is what? Opportunity to buy. So this is part one of how we phrase our bullish bias. This is part one of how we frame our bullish bias. So just like, look at another example was that USD card that I was talking about. Look at it. Now, this is a massive bearish. Now, where do we start bullish? This guy. This is the last red candle bearish. So, this is where the massive, although we have been bullish from here, so people will start from here. Now we close bullish, then we close, you can see, any day we close bullish above previous candle, AM4, we close bullish, AM4, but the total bullishness is when we close above this red candle, because this is the last red candle that traded to this zone. Then look at it, we close above with bullish, we close bullish, we close bullish, we close bullish. Now, here should have, and this is the reason why I was selling, because I have what? This candle that engulfed this, but it failed. And that's why I lose that trade. I followed my patterns. It worked. Not that it did not work. Look at it. We closed engulf candle. Then the second day, the reason why it hit my stop loss because I'm a swing trader. I was trying to hold it, but somebody that is doing day trading, imagine from here now, this will be your, let's say you enter here, you enter around this place, then you have taken that's about over 60 pips before the third day move up. So, but this one failed. But this is another good concept. So now we close again bullish. Now, the reason why I did not do anything today, because yesterday we closed bullish, and I assumed that today we continue bullish. We were bullish today, but what happened now is price run into a supply zone. So when you are following, so what you will do is mark out your key zones. As price is running to whether supply or demand, just don't trade that day, because that day may be what? A reversal day. So when you match this with your weekly, that weekly direction is meant for some of us that swing trade. But now, if your weekly is bullish, let's say your weekly is bullish, let's say your weekly is bearish, and your daily is bullish. Now, weekly candle is what? Is bearish, but daily candle is what? Is bullish, right? Let's say this one is bullish. Now, what you can do, you can trade this daily candle bullish, but be cautious. By the time we are getting to about 50% or to 61% of this bearish candle, then okay, let's say we are bullish, we bullish to 2 days. 2 days now we are bullish, right? We are bullish 2 days. Now, because the weekly is bearish, now for you to start bearish back, your daily need to align with your weekly. So you now see a bearish, you now wait for what? A bearish candle to happen on daily. So price to close bearish. So when price close bearish on daily, that means your daily is now aligned with your weekly, which will now make you to start selling. I'm going to talk more about this next week. So this is the phase 1 of daily bias by daily. By next week, Tuesday, I will still talk how we now use 4 hours to also gauge our what? Our daily bias. So go and practice this. Go to your charts. Go to daily time frame and look at whenever a bullish candle close above bullish candle, what happen? It will always happen. Look at this place. We keep having bullish candle until an engulfing candle will happen. When a bearish candle will close below the bullish candle, look at this, we continue selling. So daily candle tells all, is the map that tells you how the day will run. If today close bearish, tomorrow as I'm coming to the market, I'm looking for opportunity to sell. So thank you. My time is off here because of the Zoom. My Zoom has expired today. Next week, we'll come back again. We'll continue with all this teaching Tuesday and Thursday. Please,